Hello, everyone, and welcome to RiskScout's spookiest webinar of the year, the tricks and treats of banking MSBs. Thank you so much for joining us on Halloween, the eve before Halloween. We're so excited to have you to dive into today's content. That said, before we get started with our trick-or-treating, we do have some quick housekeeping items that we'd love to run through to make this webinar go as smoothly for you as possible. We will be sharing all of today's webinar resources, including the slide deck, any handouts, and a recording of today's session in a follow-up email this week, so be sure to keep an eye on your inbox. We also want these sessions to be as valuable for you as possible, so feel free to use the questions section on the right side of your screen in the GoToWebinar control panel. You can ask those at any point throughout today's session. We will try our best to get them answered for you. If we don't have enough time during today's session, or maybe they just require a little bit more in-depth detailed response, we'll be sure to follow up with you after today's webinar to get you the answers that you're looking for. We will also be running a couple of poll questions throughout today's spooky webinar, so please engage with those as much as you'd like to. They'll pop up on your screen. Just go ahead and click any responses to help us understand a little bit more about you as we move through today's session. Thank you so much. Your participation in those will be greatly appreciated. All righty. For those of you that are joining us for the first time today, RiskScout is a team of former bankers, regulators, and industry experts that have joined together to help community financial institutions unlock complex markets like MSBs to increase deposits from within their own backyard. Through both software and services, RiskScout reduces the time, effort, and uncertainty around expanding into new markets so you can increase your footprint without having to open new branches. If you're interested in learning more, visit us at riskscout.com. We'd love to have a conversation. Today's session will be led by Apryl Salazar, who is also going to be joined by our own RiskScout's own Kristen Parker. Apryl brings over 15 years of banking experience and is currently the Compliance Program Manager for Compliance Select. She began her journey in community banking while achieving her master's degree in constitutional law at the University of Texas at Dallas. Throughout her career, she has worked in various banking roles, more recently as a regulatory compliance program manager, chief compliance officer, CRA officer, and BSA OFAC officer. We are very excited to be having her joining us today. And without further ado, I'll go ahead and throw it over to Apryl to take us away.
Thanks, Ethan. So that's obviously my background. My baby is BSA. I got into the compliance BSA world through BSA, so it's near and dear to my heart. And I'm really happy to be talking about MSBs with you guys today, just to show you guys that they don't have to be scary, even though Halloween is tomorrow. So we're just going to go through a few things today, some of the challenges of banking MSBs, the misconceptions of banking them, how to build your program to make sure it's compliant and efficient and consistent, and then we're gonna end with some Q&A.
Perfect, thank you for that, Apryl. Now that actually does bring us to our first poll question of today, which you should see coming up on your screen right now. That question asks, are you currently banking MSBs? You can select any of the following answers from yes, we do have a formal MSB program, yes, but we don't have a formal program, no, and we'd like to develop a program, no, we don't plan to bank MSBs, or maybe you're just not sure. We give you that option as well. Go ahead and take a couple seconds here to get your answers in, and we will let Apryl and Kristen speak to them. Excellent, looks like we got the majority of our responses. I'll give just a couple more seconds for anyone else that would like to contribute here. All righty, thank you everyone that contributed there. And Apryl, Kristen, it looks like we've got our results on the screen here. The majority of our audience, unsurprisingly, just about 3/4 say that yes, they do have a formal MSB program. That said, we did get some responses from the no side of the house, with both representation for both no, but we would like to develop, and no, and we don't plan to develop. April, I'm curious, how does that kind of stack up to what you're expecting or what you tend to see out in the market?
So I've worked mainly with community banks, and most community banks don't tend to bank MSBs. So I was a little surprised that, or at least the ones I've dealt with, that number that they were banking and had a formal program was so high. But the not planning to get into MSBs wasn't a surprise to me. But Kristen, what do you think?
Yeah, same exact thing, April. I see a lot of community financial institutions kind of flirting around with the idea sometimes, and then they get scared quickly, or they've tried it and they didn't see the traction, or that it got to be too difficult for them that they backed off of it. So it's nice to see that there is a bigger crowd here actually serving, because I truly believe, my background is as a BSA officer at community financial institutions as well. I've ran my own MSB programs. It's oftentimes that they are more misunderstood than they are nefarious businesses, and they don't know what they don't know on how to communicate with their financial institution. And so I think there's a lot to learn here during this session as we talk through, what it's like to run a successful program from both your viewpoint as a financial institution, and then both the customer's viewpoint, because I think both are equally as important to have a successful MSB program.
Perfect. Thank you all both for sharing there, and thank you to all of our audience that participated in that poll question. Without further ado, go ahead and dive into some of these challenges.
All right, just some few of the key challenges that we'll talk about today. I think it's really important to first dive into what is an MSB. These are our money services businesses, and then compare that to our non-bank financial institutions. We'll look at some federal, state law requirements, how they can differ, staffing issues, which I know is always a big thing in the compliance BSA world, regulatory pressure, increased risk, that CDD, EDD that we have to do on all our customers, and then the expectations of programs. So what is an MSB? It's really important to define that and understand it. From the regulation standpoint, it's just any person doing business, whether or not on a regular basis or as an organized business concern that provides one or more of the following services. So when you're looking to determine whether or not your customer is an MSB, ask yourself, do they sell money orders? Do they issue or sell traveler's checks? Which honestly, I don't know that anyone out there still does that, but maybe they do. I haven't seen it in several years now. Do they cash checks? Are they a currency dealer, or do they do currency exchange? Are they a seller of prepaid access cards? And then if they are doing all of that, what is the amount they're doing it in each day? So if they're selling money orders and they're conducting it from $1,000 or more per day per customer, then that makes them an MSB. So it's kind of a component of two things. Are they doing these things? And then what's the dollar threshold? And then, of course, you have your money transfer services. If they're doing that at all, it automatically makes them an MSB. So this is a question I get a lot, especially with banks, BSA departments that are looking to get into banking MSBs, is how does an MSB differ from an MBFI? A lot of people don't understand the differences. Well, the MBFIs, your non-bank financial institutions, they're broadly defined as institutions other than banks that offer financial services. The USA Patriot Act has defined a variety of entities as financial institutions, and these do include MSBs. So I like to think of it as all MSBs are an MBFI because of that dollar threshold, but all MBFIs don't automatically equate to an MSB. So it's kind of an easy way to look at it. There's obviously more things you got to get into, but that's kind of it in a nutshell. So those federal and state laws, this is where it can get a little tricky. From the federal standpoint, you know that all of your MSBs have to register and renew with FinCEN. The Internal Revenue Service does have authority to examine your MBFIs, which includes your MSBs, of course. But FinCEN oversees the administration of the Bank Secrecy Act by numerous agencies, which includes the IRS and your federal banking agencies. Now, does this mean the FinCEN's going to come in and examine your bank in your MSB program every 18 months or whatever your exam structure is? Probably not. And if they are, you probably have issues going on within your program. So normally it's going to be your state Department of Banking or your federal banking agencies like your FDIC, OCC that are going to come in and look at your BSA program, and within that they're going to evaluate your MSB program. That to me is pretty straightforward. It's when you get into the state piece of it that can get a little tricky. States may have different licensing requirements. So you're going to need to understand if your bank has locations within multiple states, and or if your MSBs have locations within multiple states. What are the licensing requirements within those states? And you know, some of the states have different definitions for money transmitters, check cashers. So you're going to want to look back to your state statutes to understand how they truly define what an MSB and these particular services that they offer are. And then I've seen that some counties and cities may also have their own licensing requirements. I've never actually dealt with that, but that's just something that you might want to keep in the back of your mind if you are thinking about getting into an MSB program. And then the states may also have regulatory and enforcement responsibilities. And Kristen, I know we were chatting before this because you have more experience in different state MSB programs. Do you have any content or color to add to that?
Yeah, I think first of all, if you start at the federal level, you know that these MSBs register with FinCEN, and the cadence of that registration expiring can be tricky for banks to really grasp. They register with FinCEN, and on the year that they register, it counts as one whole year for them. So they have to renew every, I believe it's 2 to 3 years. But that first year, even if they registered on December 15th, that counts as a whole year for them. So they get all tripped up themselves because they get they being the MSBs, because they get no notification from FinCEN that their license is going to expire. So it's important for you to recognize that and to keep track of that on your own, because you may have to remind your MSBs that they need to re-register with FinCEN, because other than just registering with them, they don't really much contact beyond with FinCEN, and FinCEN is not going out of their way to remind people to re-register. So just remember, if your MSB did not register, if their registration has lapsed, that does not mean that they are necessarily being a bad MSB. It may mean that they're checking all the boxes, they simply forgot or didn't understand when the licensing renewal was coming up to fruition. It used to have a calculator on the FinCEN website for MSBs to use when they're to know when their registration is going to expire, but they closed that page down. So just keep that in mind, that your folks may let that expire, but it may not mean that they're not doing their job. They just need a little help reminding. The state side can get a little bit trickier because it can vary from state to state. The last community financial institution I worked at banked in North Carolina, South Carolina, Tennessee, and Virginia. So there were varying state laws and licensing requirements based on each of those states' requirements. So you have to have a good knowledge base and a good resource for understanding who requires what license. I never had any that went down to the county level, but my rule of thumb in a risk-based approach for any type of, you know, more burdensome type customer requires licensing and checking and this and that and the other. You know, it's one thing to check a box and say, yes, they have that FinCEN. The other box to check would be that state licensing. I wouldn't go beyond down all the way to a county level from a risk-based approach, because if they've passed the state's requirements, that means state's probably checked to make sure that they have these other licensing requirements, or that's a safe assumption to make, right? So I think if you're checking both the federal, state, and state top level licensing, you're pretty well covered in what you should be looking for. Most counties I know that have tried to, in the past, require a drill down that deep. That's lasted a year or two, and they're like, this is too much to upkeep. We don't need a whole department for this, and they back off of it anyway. So I think it's safe to say from a risk-based approach, you can check both those boxes for licensing.
Staffing. Again, if you've been in the BSA compliance space for any amount of time, you know that this is probably one of the most difficult things that you face. Not just from the number of people standpoint, but the knowledge and experience. a lot of the tenured BSA compliance people, they are getting ready to retire. And with that goes out the door their experience, not just with BSA and MSBs, but your customer base. So that's a huge challenge. So make sure that you're gearing up for a change in your BSA, your MSB staffing program, and have a backup, a succession plan. Another challenge with staffing is there's still a lot of manual processes out there. I've worked at banks from 150 million all the way up to a $38 billion bank. And so obviously within them, I've seen different processes, but every single one of those banks had at least one piece that was still manual. So that can be a challenge from the staffing standpoint. And then just some numbers that I pulled out of a CBank report for your average BSA AML size. And granted, this isn't just your MSB program staffing, but for banks between 500 million to $1 billion in assets, typically they'll have between 1 and 2 individuals working their entire BSA program. Banks with 1 billion plus typically will have 2 to 3 individuals. And then this number really surprised me. 50% of financial institutions in the United States didn't have BSA AML software. Coming from that $150 million bank where we had to do everything manually, I could not imagine in this day and time going back to not having software. The banks that I work with today, even as small as they are, pretty much have BSA software, thank goodness. So that's just surprising to me.
I think it's also really telling to know that you may have BSA AML software or you may not, but that doesn't necessarily mean that that BSA AML software is going to solve for your MSB, because those are still going to be something that your alert parameters, your typical alert parameters, may not be able to adjust to accordingly. You may end up with a lot of false positive alerts, or just, you can't dial it into really the risks associated with MSB. So there are more touch points that occur with an MSB relationship that causes you to have to look through those transactions probably a little bit differently than when you would just relying with other industries on your BSA AML software. I know coming from the space that I was in, we were on an old tech stack. So unfortunately, the BSA software we had did not cover the needs that we had for our MSB program. So that's just something to keep in mind from a staffing perspective, is that depending on the size and volume of the MSB, and if you're doing a look back review over certain periods of time to ensure that the activity in the accounts commensurate with the stated nature of the business, dependent on the volume of that relationship, you may want to consider doing those reviews more frequently. And I know we'll probably touch on this in a little bit, but I think it's important to know that staffing should be a factor in here, and contingency planning, like April said, is really important. That the portfolio that I left didn't have contingency planning. I guess they thought I was going to work there forever. And when I left, nobody could pick up that volume. So that program was closed. And, it does take special training to understand MSBs and those transaction types. So you've got to really ensure that you either have an expert on staff for that, or you're partnering with an expert that can help lead you through what you need to be looking at, because it is kind of the wild, wild west when you first get in there to kind of understanding what's normal for these types of businesses. Because as risk averse BSA folks, we're probably most of the time going to assume everybody is laundering money, right? And it can look that way if you don't understand your MSB's practices and really dive deeply into understanding each MSB relationship separately, because it's hard to bucket them all into one and saying they all should look like this, they all should look like that, because it's really not the reality of MSBs.
Regulatory pressure. So I always like to give a shock factor. These are just enforcement actions over the past 5 years. Granted, not all of these are related to MSBs, but it does show you how heavily regulated the BSA MSB space is. Really, again, just a shock factor to show you. And you might be looking at it and being like, oh, 3 enforcement actions year to date is not that bad. But when you really start digging into why these banks had these enforcement actions, whether or not it was related to their MSB portfolio or not, it can get pretty scary to look at what those institutions are having to do now because they've had those violations and the fines that they're having to pay. And just, high-level overview of why you don't want a BSA AML OFAC violation. There can be consent orders, cease and desist. From the bank standpoint, it can affect your mergers and acquisitions. From the institution and the individual standpoint, you can be assessed penalties. You can go to jail. And like I used to tell my old bank president, I don't look good in orange and I don't have more than $1 million to just offer up. So, you know, from someone who's overseeing a BSA, AML, MSB program, you want to make sure that your program is buttoned up as much as possible. So just some risks of banking MSBs that you should be aware of. Obviously, most of the time they're going to be cash intensive. They also tend to offer diverse products and services, obviously have a diverse customer base. They might not even have a consistent customer base. They lack the ongoing customer relationships. Obviously, people who are going to cash their checks at an MSB may or may not have a relationship at a financial institution. So these MSBs may not have that relationship like you do with your customers. They might not have the proper identification requirements or record keeping pieces built into their program like they're supposed to. They could also have frequent changes in their product mix, locations, you know. They might dabble in MSBs like with the check cashing piece at first and then realize, oh, they can be more lucrative offering money orders products to their customers, but maybe they don't inform the bank of that. Or maybe they started doing the MSB activity at one of their convenience store locations and then expanded it to another. So that could be a risk if they fail to communicate it to the bank. If they're offering money transmitter or currency dealer exchange services to cross-border transactions or areas with heightened BSA, AML, money laundering risk, those are things you're going to want to understand about the business. New businesses, new MSB businesses tend to lack an established operating history. So a lot of times from what I've seen, they'll come into the banks and, you know, your new account staff will go through that CDD piece of it, and the MSB business will have no idea what their anticipated activity is going to look like. That can be a risk to the bank because obviously if you don't know what their anticipated activity is going to look like, how are you going to properly risk rate them or continue to do their monitoring, right? And then just keeping in mind whether or not even the bank and or the MSB is located in those HIFCA or HIDCA areas that could lend to a more risky customer base activity. Here in Texas, pretty much everyone's either in a HIFCA or a HIDCA, so that's something we have to take into account there. Doesn't necessarily mean they're super high risk, no, but can it? Maybe.
Yeah, and I can just add a little color there too. From the cash intensive side, there's solutions out there for that. So my advice would be you don't establish an MSB program without having some type of cash transit plan. These businesses become cash intensive quickly, and you don't want to put your branches in jeopardy, your branch employees in jeopardy. And then you also don't want to set the expectations with the MSBs if they have an ebb and flow in their activity that they can just pop in at any time and get cash out that they need, because a lot of times you're only ordering once a week and you don't have potentially the money on hand to cover the rest of what you need to for the week. So it could be a bad customer experience. So it's better just from an employee safety standpoint to think through that process first. And then it's also important to have that expectation with the MSB that if it's every once in a while they need to like break the cycle and come in and get cash, what's that limit of what they can ask for? Because you're going to end up with that problem right off the bat with your MSBs. The other thing too, if you're using a cash in transit, you're responsible for those CTRs. Don't let that ACH settlement transaction not somehow get converted into cash within your core, because you should be filing those CTRs. I have seen and I have been there where somebody has set up cash transit before and failed to inform our end on BSA, and lo and behold, 300 backfiled CTRs later. That's not a fun experience to have at all. So I always tell people, don't make the same mistakes I did. If you have cash in transit, just have a process also for ensuring that it remains as cash coming in, because you could have turnover in maybe your deposit ops area that's responsible for processing those cash in transit. If that's the case, you need to have some type of testing to make sure that all of those transactions are rolling through there on some type of set cadence. So just word of caution for you there.
So CDD, EDD, obviously this can be a challenge regardless of if they're an MSB, but especially when it's an MSB. First off, it's knowing how to identify an MSB, and that goes back to training, communicating, which we'll talk about a little later. But what documentation information do you collect on the MSB? So obviously you're getting that CIP information as you would any other customer, but then you look to your CDD. You obviously will go through your normal CDD that you would for any other business type, but then you're also going to want to understand, is there additional documentation that you want to ask from that MSB? And then really look at what your risk appetite is for the MSB and determine what else you're wanting to obtain for that specific customer, and implement that into your CDD, your EDD, your BSA, MSB procedures. Registration and renewal, which Kristen hit on that earlier with how it can be confusing. You're going to need to know who is required to register, when they're required to register. Like she mentioned, it can get really confusing whenever they register or they register with FinCEN at the end of the year and don't realize that counts for the full year. So keep track of it yourself. In my past life, we would send letters out to our MSB customers saying, hey, your MSB registration is expiring at the end of the year. Make sure you're getting it renewed. We've already talked about the licensing requirements, but those can be worked into your CDD, EDD piece, and then monitoring, which I think we'll talk about a little bit more later on.
Yeah, and I'll just add, a lot of times it's best to, in these types of situations, obviously there's frontline staffing that needs to be trained up on how to help identify an MSB. Maybe that's built into your questionnaire that you're asking in the beginning. A best practice would be to not onboard an MSB before it has been internally vetted to ensure that it fits your risk appetite and your program goals, because it's a terrible customer experience to onboard somebody and post tense ask for the information that you should have asked for from the very beginning. That is all around terrible experience for everybody, and it's there are ways to streamline. That's one thing we do at RiskScout well, is we help those institutions identify and then proactively be able to send out questionnaires to their customers or their prospects so that they can get the information they need to quickly decide whether or not this is somebody they want to bank or they don't want to bank. So just think about that when you're building out your program procedures, is it should not be after. You're going to find guys that trickle in, that trickle in afterwards, that have already been your customer or maybe have changed their business model. This is why it's important to have that ongoing due diligence, a refresher of information from your existing customer base as well, because you're going to find MSBs that exist, have fallen between the cracks, maybe intentionally or unintentionally by that customer. Maybe they came in under the guise of a normal business because they've already been kicked out of another bank over here. So they may be trying to find pull the wool over their eyes. So the training goes on the front side to help identify, but it also is a backside issue too. Like your back office issue too should be able to know when they're looking through alerts and things that whatever that alert triggered for, they should also potentially be looking for MSB type activity, because that would bubble up somebody you need to monitor differently than just your normal run of the mill customer.
So some expectations. Obviously, we talked about the diverse products and services that MSBs can offer, but MSBs can also be very diverse entities. Most of the time, you're probably thinking they're going to be your C-stores, your convenience stores, your gas stations, and you're probably right. But you can't forget about the other entities that may offer these type of services. Whether it be a pawn shop, whether it be a gold and silver dealer, those type of things can be classified as your MSBs if they're doing certain services, or if they're offering certain services to their customers. If they're engaging in many different types of commerce, that goes back to, are they check cashing? Are they doing money transfers? And then banks are expected to manage your risk, obviously, so you have to know your customer. And that goes back to your CIP, your CDD, your ongoing monitoring, your EDD. And then Kristen even mentioned earlier about the CTRs. You have to file your CTRs, and then you have to file your SARs if you are finding that your MSBs, aren't renewing even though they've been notified to renew, right? Because then they're out side of compliance with the Bank Secrecy Act. So then that puts your bank in a real pickle. But also if they're conducting suspicious activity in or through your bank, you're going to need to file that SAR.
Yeah, absolutely. I think it's really important to know, like we reiterate, like we did at the beginning, that not all MSBs are created equally, right? Not all of them are truly educated that they are an MSB to begin with. We used to find MSBs because we were looking through checks and we would see that this person is cashing a lot of checks for this particular individual on a single day, and they tripped the wire of $1,000. So they didn't even know that they had tripped the wire, and they've been doing that multiple times. So it's also about, again, that education. This is why it's so important to not just know your customer as soon as they walk in the door, but there's got to be a refresher of information on some type of set cadence, so that you may find customers that just started out as one and then again flipped to being an MSB, knowingly or unknowingly. There's a lot of ATM businesses that we see out there right now that are also installing. They don't even have to get new machines. They just plug and play to offer digital currency. Well, that triggers them to be an MSB. So there's something you need to be asking of your ATM customers. So having that set cadence of refreshing information is really important. And if you are typically, like most institutions, that requires, the BSA officer is like the wizard behind the curtain. We don't exist, but we do. We don't want to be known. And then we have to go out to the business development officer to say, hey, go to the customer and ask for this information because we've got to have it for our reviews. And then you go, they either drag feet or they try to do it immediately and they get half the information because they don't know any better, right? Or they don't want to inconvenience the customer. And the last thing the business development officer wants to do is to go out doing compliance work. They'd rather be sitting there selling, right? Meeting and reaching their own goals. So there are solutions out there that exist. And that's one thing we, again, do at RiskScout here is help with that automated refresher of information collection so that you can leave your business development officers out of the picture, and then a questionnaire is sent out with whatever questions you want on whatever set cadence you want to ask for that information directly from that customer. One thing I think we need to point out here, April, too, is a lot of times there's language barriers that exist between the bank and the MSB. And, if you are a primary, like me, an English speaker, then me communicating with my primarily Spanish-speaking customers was difficult sometimes. So there are language barriers that just can cause rubs that shouldn't exist at all, but just unfortunately part of the scenario. So you got to be thinking through and getting ahead of that in that perspective as well. So that's one piece of the puzzle that seems to be missing a lot is people don't think they're getting successful information from their customers because they don't know how to ask for it easily, so it can be given to them easily, and they don't think through that language barrier issue. So those are just some food for thought for you guys to think about, better ways for you to streamline that information collection so that from a customer experience standpoint, it's a great customer experience, but then on the other side, you're getting the information you need to quickly be able to turn a review around quicker than you would just if you were like my old life where you would do your transaction review and everything checked out, but you're missing all this documentation that needed to be refreshed. And so you're waiting months at a time sometimes to get that information back, and you're constantly living in this cycle of behind, I'm behind, I'm behind, I'm behind. And so that's what we really address, at RiskScout, because we understand that challenge that you guys will face every day in these programs.
So some other expectations, MSBs are required to have their own BSA AML written program, just like you guys as banks. So know that banks are not held responsible for their MSB's BSA AML program. But I will just say that if you are obtaining their BSA AML written program as part of your CDD, and there's something within that program that's clearly written in it, and you are seeing that they are doing that in their account, through their account, in their transactions, it might be difficult to argue with your examiner that you didn't know that they weren't supposed to be doing that. I'm not saying don't get their written program, and I'm not saying do it. It's a risk-based decision for your bank. It can be, there can be pros, there can be cons to getting it. Just know that. Also, neither the BSA regulation or the federal banking agencies or FinCEN require a bank to be the de facto regulator of your MSBs. All that means is that you're not required to go back and regulate them. So that does also mean that if you get that written BSA AML program from your MSB, you're not required to go back and look at it and say, oh, okay, this is what it says and this is what we're seeing, or this is what they're actually doing. But even with that said, just know that if you have documentation that clearly says that they shouldn't be doing something and they're doing it, might be something you want to just heed caution. Not all MSBs pose the same level of risk. I think that you've probably heard that sentiment throughout this whole webinar. You might have an MSB that is high risk just because it's an MSB. Maybe you risk rate all of your MSBs as high risk. But within that subset of MSBs, you could even risk rate it within the MSB. So the MSB itself might be high risk, but when you look at that MSB compared to another MSB within your portfolio, if one's doing $500,000 in cash every week versus doing $25,000 in cash a month, probably not the same risk. So just think about that. That can also affect your monitoring, depending on your monitoring schedule for your MSBs in high risk. And then obviously, bank itself is expected and required to conduct your risk assessment on your overall BSA AML program, but also within your customer base. So make sure you're risk rating your customers as well.
Yeah, and I always collected the BSA AML program because I wanted to know, do they even know what they're doing? I think it's important that you understand that your customer knows what they're doing. Now, that are they finding a program off the internet that they've printed? And probably, but at least you've been you're acknowledging this and you're signing off that you're attesting that you know what you're supposed to be doing. I never went to the level of comparing their policy against what they're doing, because again, I'm not supposed to be their de facto regulator. Exactly. But I want to know they have a BSA officer. I want to know they have an OFAC program, that they have CIP, that they've thought through all that, because at the end of the day, if they're not doing those things, I could erroneously be allowing a business to cash checks for somebody who, I've had this happen in my life. So they are cashing checks because for individuals and are not authorized to work in the US. And they had everything checked out on paper, like it looked great, but at the end of the day, the review of the activity and the concentration of checks was what we were looking for. We noticed a pattern, and this individual could talk the talk, but it's, so it's not about just collecting that information, but it's also validating to a certain extent when you notice something, like April said, is off in here, that you're going to do your extra due diligence to say, hey, what are you doing here? And if you have an open relationship with your customer, they're going to sometimes tell you stuff that you wish you'd never known, which is exactly what this customer is like. Well, Kristen, I'm doing it because there are some people I have cash checks for that aren't supposed to be in the US. Well, then obviously you can't bank here anymore. But, I had that open form of dialogue, so they felt comfortable enough to tell me that information. Is that the case for every BSA officer? No. But there are tools and to help you kind of delineate and understand your customer and ask those follow-up questions so you can get supporting documentation to really memorialize what your findings are or aren't.
All right, just a few misconceptions. Obviously, we've already said that all MSBs aren't always high risk. It's really dependent on your bank and the MSB, that all of them require a lot of work. I'm not going to say banking MSBs is easy or it doesn't require any work, but it may not require as much work as you think. Obviously, setting up your program is probably going to be the most intensive part of it. Once you get your program down and it's consistent, it's efficient, you have trained and knowledgeable people working your program, and you've communicated all of those requirements to your first line, second line, third line, the work might not be as intense as you think. Also, we've hit on it, not all MSBs conduct money laundering or other illicit activities. There's a misconception out there that MSBs are the exception to OFAC. That is not true. Just like when your MSB customer comes to open their account with you, you have to run OFAC on them. MSBs are expected to run OFAC on their customer base as well. And then there's a misconception that all money transmitters must register with FinCEN. That is not necessarily true. It goes back to looking at whether or not the The MSB is a money transmitter or an agent for a money transmitter. So is your MSB customer an agent for Fidelity? Or I'm blanking right now on some of the other money transmitters for some reason. But that goes back looking at their agreement and finding out whether or not they are. And then it's a misconception that they're not regulated, which we've already said. They are. All right, so the part that you guys are probably all really interested in, which I know Kristen's given a lot of valuable nuggets of information that can help you build your effective MSB program. But first and foremost, if you are not banking MSBs, which the majority of you on this call are, so even if you are, maybe this is still valuable information to you guys, but go to the FFIEC BSA AML exam manual. Look at the MSB section. It is going to be your Bible for banking your MSBs. It tells you exactly what they're going to come in and what they expect, what they're going to look at. And then take that information. If you are planning to build out an MSB program, determine what your business case is. This is going to be so valuable to you to conduct the research on how much time it's going to take to build the program, to implement the program, to get the buy-in, to keep the program going. Do all that research because your board and your senior management are going to ask you those questions and you need their buy-in and their approval early. Don't just do all this and then bypass your board and senior management. Remember, your board has oversight of your entire BSA program. So if they are not willing to jump into the MSB waters, then all that information and all that work that you put into place and started doing to create this MSB program and dive in is going to be a moot point. Because if they come back and say, oh, we didn't want to deal with MSBs and you already started doing it, now you have not only a whole compliance issue where you have to retract all of that, but now you have a customer service or a customer reputation issue on your hand, right? Now, what are you going to do? You're going to have to go to all of those MSB customers that you already onboarded and tell them, oh, sorry, we're not going to do MSBs anymore. That doesn't really paint you guys in a good light if you have to do that. And then your program creation, incorporating your BSA, AML, and OFAC program. Remember those pillars. You have to have your BSA compliance officer, staffing, your internal controls, which we're going to talk about, training, which I think we're going to talk about some more on another slide, and then your independent testing. You have to work this into your audit scope going forward now. And then, as Kristen mentioned, it's ongoing. It's an ongoing maintenance of your program, but it's an ongoing touch of all of your MSB customers as well. And then building that culture of compliance early. Getting your lines of business involved in the process and the implementation plan is going to be key, because if they don't understand why you're getting into these particular customer bases or what their responsibilities are or why they need to do it, it's going to be an issue throughout the program because they're not going to trust you. They're not going to want to give you the information or go get the information for you. So reach out to your first line of business because these are ultimately the people in your bank that are most affected. They're the ones talking to the customers, right? They're the ones getting the CIP, the CDD, determining whether or not they're MSBs. And then fees. Your fees can be lucrative here. You can actually make money on your MSB customers. And this goes back to doing that research. So if you're thinking about getting into this product type, this customer base, or even if you've been in this set of customers for a while, go and do your research on what other banks that are banking MSBs are charging and determine what looks right for your bank. Also, while you're doing that, ask them the things that they've seen, that they've learned through their program, and you know, the pros and cons of it, the risks. You know, there's some banks that are getting out of the MSB space altogether. If you happen to talk to that bank, ask them why, understand it, because it's going to be really valuable when you go to build out and or update your current MSB program.
Yeah, and I have a little cheat sheet of average fees that most institutions charge for. That's a standard practice. So if you want to reach out to me after this, I'm happy to share just like a one-page document of I've worked with many MSB consultants who help MSBs set up and help banks and credit unions set up. So we've got a nice little one-pager that I'm happy to share out with you guys if you reach out, because the fee income, and you've got to dial that in from the very beginning. You can't go from here to here. These MSBs are expecting to pay fees, and they will because they need somewhere to bank, right? And these guys are very, very loyal customers as well. So once they find a bank, and if they're treated right, you know, fee is fair compared to other areas, they will stick and stay. One thing to also note here is that having a reserve account is very important for your MSB. So you can get sticky deposits from these relationships as well. Reserve accounts are there to account for any type of returned items, and they should really be kept on 12 to 18 months, even after that relationship is over, to account for any return checks. So they usually end up being a percentage of what their volume is. So you should really be considering that if you're looking for deposits as well. That's a great way. So both a fee and a deposit plan on these guys.
So your internal controls, these should be things that you guys already are thinking about from a BSA standpoint, but obviously you're going to need to work the MSB program into your policy and procedure. Identify the responsibility. I mentioned, you know, on the last slide, your first line is going to be key here. They will have a lot of responsibility. Your second line, obviously your BSA team has the compliance responsibility for it, but then working it into your third line, your audit line, making sure that they understand what their piece of the pie is. I mean, Kristen mentioned it earlier about, you know, getting the approval process of your MSBs is key as well. So you're going to need to understand, how are you going to approve these? I urge you not to just let any MSB walk in off the street and bank them. I urge you to have an application approval process that feeds back to your BSA department and whoever's supposed to approve that. That way you can look at it and do a high-level overview early on. That way, like Kristen said, you don't have to go back and after you've onboarded them, you know, tell them bye-bye. It doesn't look well. You know, your enhanced due diligence document requests, we've already chatted about that. Your risk assessments, again, work it into your overall BSA AML risk assessment, your customer risk rating risk assessment as well. The monitoring, you're going to have those procedures in place to conduct the monitoring. Determine your monitoring schedule based on the risk of the customer, and then be consistent with it. Don't let those get behind. You know, the filing and reporting requirements of CTR and SARS. MSBs cannot be exempt for CTR purposes. So make sure that you are not exempting them. You have to file those CTRs on them. And then training, we've hit on this a little as well. You're going to be training your employees. You now have to work MSBs into your overall BSA training, which also means you need to train your board on this, why you're banking them, you know, what this means. But think about training your customers. As Kristen's mentioned several times, MSB customers for the most part, don't mean to break the law or go against the MSB requirements. Most of the time, they don't know they're doing it. So take this as an educational piece to inform them of what they can do and what they can't do. And then also, I'm a big believer in trying to tie regulations together. Use this as a financial incentive to train them under the CRA. So now not only are you complying with BSA and having your MSB customers comply with BSA, but then you can potentially get that CRA credit for financial education. Sorry, my mind is going blank.
Yeah, I think those are all great points. And then ongoing, you know, customer communication is super critical here. So I always had a line with any of my higher risk vertical customers, MSBs being one of them. I would say, you have to help me defend why I approved your relationship to banking, and put the onus back on them. Bring some humanity in here into banking, back to banking, right? You want to serve your community, but you need them to adhere to what you're asking them to do. So when you ask for something, they should know, because you've set the expectation from the very beginning that they are to turn that around to you within, you know, whatever time frame that you've asked for. And as soon as they become non-communicative, then you know there's a problem. And that's not the customer that you agreed to onboard at that point. And that's triggering potentially for an exit of that relationship. When they become non-responsive, or they have changed the scope of their MSB portfolio, that it no longer fits your risk appetite. There's lots of different trigger points that can happen, but when the communication and the training piece of it is huge. So just set that expectation and just be human about it. Be clear with them. You need them to help defend you at their own institution, not even against just my regulators, but against my own peers, because this is work for everybody, you know? So most of the time when you bring human into these conversations, they become more responsive to you as well, right? Because they know, oh, this person just really wants to do their job as well as much as I want to do mine. So if we work cohesively together, we can have that as, exclusive relationship where we're taking care of each other on what we need.
To risk assessments. I'm not going to spend too much time here because we've already chatted about this and I think we're running a little short on time. But work this into your BSA AML risk assessment. Your risk and controls, obviously this adds a level of risk to it. So understand the controls that you need to have in place. And then remember, you're going to need to update your risk assessment, probably at the very least on an annual basis, but anytime you make changes to your BSA AML program, which involves your MSBs, and or if your MSB customer portfolio changes, and then doing that individual MSB customer risk assessment. I actually have a whole sheet, which again is a manual process that I utilize to risk rate that MSB within its MSB subset.
Yeah, and I think it's also important to reiterate here what your policy says is what you're going to be examined against. So if you've written in your policies and procedures that you do something and you're not doing it, you can have a pristine MSB program, but if you've not done what you said your bank is going to do, and that's a cause for a write-up, right? So be cognizant of how you write your policies and your procedures, because you don't need to over-engineer them. They can. Don't back yourself in a corner with your policy and your procedures. Make them to where they are flexible and can work towards you through conversations that you're having with your regulators, because they just want to know that you have built a reasonable and achievable program that ensures that you're safeguarding your institution. You don't have to go collect everybody's blood type and all that to do that. You can have a risk-based approach, just has to be documented accordingly as well.
So just some red flags to be aware of. I'm not going to go through all of these, but if they present insufficient or suspicious documentation up front, or they don't submit it at all, red flag. If their actual activity doesn't line up with their anticipated activity, why? You need to understand why. Maybe it's just because it was that new business and they didn't really know what their actual was going to look like. But if they are they've been in business and been doing MSB activity for some time and it doesn't match up, you need to understand why. Are they making excessive deposits or withdrawing currency? This might be normal if they're cashing checks, but if they're not, then you need to, again, understand that why. Structuring. I don't know about you, Kristen, but I see a lot of MSBs that structure. And they don't do it on purpose. It's because someone down the line told them that they cannot get money out over 10,000 because it's going to put them on a report. And no one wants to be on a report. But the problem is that your CTRs are fine. Like, be on the CTRs, and we all know this as BSA people. It's the structuring that gets you into the dicey suspicious activity SAR reports. So that can just be a red flag. But again, that goes back to the communication that Kristen's talked about. Communicate with your customers. Tell them it is okay to get more than $9,000 out every other day. But then if you have that lack of communication, again, like Kristen mentioned, that's a huge red flag. Why aren't they communicating with you, right? You need to understand why, and you need to let them know. Again, like she said before, set that expectation. You expect them to communicate back with you. CIP, CDD, EDD, all that fun stuff. We've chatted about that. Create it and work it into your program. Understand what documentation you're going to get. Understand how you're going to communicate this to your customers. Put that, in procedures. Set the tone with your staff on how they're going to communicate, how they should go about asking for this information. During that CDD, EDD piece, asking your MSB if they have an ATM, like Kristen mentioned earlier, because if they do, and then they, plug that little thing into their ATM and it makes them a cryptocurrency ATM, that throws them into the MSB category. But also, I am a firm believer in asking your customers to set up completely separate ATM accounts.
Yeah.
Because this is going to help you understand that the cash that they're taking out of their ATM account should pretty much match up to the ACH credits they're getting from their ATM processor. And then you don't have to think about, is that part of their MSB activity, right? Because you can easily identify this. And then you can go to look at their true MSB activity with all that ATM cash activity pushed aside, and you can really get a big picture and a better idea of what truly their cash intake is versus their check deposits, right? Doing site visits is huge. I firmly believe in this as well. In my past life, we would do one at initial onboarding to make sure that, you know, they really were an MSB functioning where they were supposed to be or said they would be. And then depending on their risk rating within their MSB category, we would do follow-up site visits. And this can be, you know, quarterly, semi-annually, annually, or as needed. But just a quick story on this. In my past life, we had an MSB who we went to do their annual site visit and found out that the building was burned down. We started doing an investigation. It had been burned down for 6 months. The customer never communicated this to us, but yet his MSB activity was still functioning as normal. He moved all of it to another convenience store. So this is also where communication comes into play. But the site visit was key here because it helped us understand what was going on with the customer. And then monitoring, determine your monitoring schedule.
Yeah, and just, I know we're running short here, but just on the monitoring piece, it's going to look different potentially from relationship to relationship. And there is going to be still some manual touch points in there to kind of understand the activity, because if they're transferring money, there may be some information you want to collect from that customer just to sample who they're transferring money to make sure everything aligns. You don't have to like go down the nitty gritty of every single transaction matching to every cash transaction. You got to understand there's going to be some volume in there. But from MSB to MSB, I've never had one that looked like the other from a monitoring. General monitoring, yeah, you'd say we do this quarterly, but if they were transferring money, if they also were cashing checks and they were also offering bill pay, those activities can be commingled. In one activity, somebody coming in to pay their electric bill with cash, that cash can be used to pay a check out, so that somebody is cashing a check. So their cash activity may not always directly correlate and align with their actual checks that they deposit. So you got to like really have that kind of 1,000-foot view of what does their business look like in its entirety, because the bill pay wasn't part of the MSB, but I needed to know it existed because that helped fund. And when you added all the percentages up, it all made sense. But it's to the point where sometimes you have to kind of think outside of the box, and you just need to know your customer holistically to really understand, does, you know, A match to B appropriately. And so if you guys are running into situations where that's difficult for you, I'm happy to walk you through some scenarios the way that I used to be able to quickly look through my varying different types of relationships, because there are different tips and tricks to being able to really understand if the activity in here is reasonable.
Yeah, and so just some key takeaways. I hope if you take anything from this is that MSBs do not have to be scary as long as you think through your processes and plan. Get your buy-in early, devise and implement a thorough program, and then set your expectations early and often. Set them with your internal customers, which are your, you know, first, second, third lines, but also your MSB customers.
We all want to remember that on both sides of the table, we don't know what we don't know. So, you know, taking what you've learned today is going to be great, but putting it into play is a whole different thing. So if you need help there, just more people, either April and I'd be more than happy to walk you through, you know, a reasonable and achievable program looks like. And then on the opposite side, remember that your customer doesn't know what they don't know. So again, training and communication is key here for a successful relationship.
That is true. April, Kristen, thank you for that. I know we've got about 2 minutes left. We do have a couple of questions that came in, but we do want to ask our last poll question of the day first. So you should see that coming up on your screen. You can answer with as many or as few responses as you'd like. This is just a quick question asking, would you be interested in speaking with RiskScout about any of the following, whether that's MSBs, whether that's beneficial ownership, learning more about Compliance Select, you name it. Go ahead and give us those responses and we will be in touch with you. That said, if you do have any questions you'd like to ask, feel free to do that in the questions section of that GoToWebinar panel. We did have a couple come in, including a question asking, will the deck be available after the webinar? The answer to that is yes. We will be sending out all of the resources in an email to you tomorrow morning. So go ahead and keep an eye on your inbox for the recording, handouts, the slides, you name it. It will all be in your inbox. We also had another question asking, Kristen, they said that they were interested in getting that income cheat sheet that you had mentioned. Y'all can go ahead and visit RiskScout.com. Go ahead and shoot us a message through our Get in Touch or Contact Us page, and we will be sure to kick that over to you. I'm sure Kristen would be happy to share that with anyone and everyone that's interested in receiving that. Excellent. I'll go ahead and close that poll. And we have time for one more question, I believe. We got a question that asked, what is the best way for us to stay up to date on the latest MSB related regulations? April, I'll throw that one to you. Do you have any recommendations on that front?
Yeah, I would say register with FinCEN to get all of your communications. That's probably going to be your best resource. And then, obviously your state, federal agencies as well. You might get more from there than you are really wanting. It might not be necessarily just BSA, MSB related, but definitely the FinCEN piece of it.
Yeah, and I'd say partner with a subject matter expert. If you're just getting their newsletter alone, they're going to keep you up to date on any type of changing things that can occur. We do that at RiskScout. If there's something that's occurred, we'll send out a blog alert and write a blog on it so you guys are aware. So, you can sign up at RiskScout.com to get our newsletter, and that's another good way of staying abreast of things that are changing pretty rapidly.
That's right. Thank you both for that answer. Again, if we didn't answer your question today, or if you just want to reach out and say hi to us, feel free to do that on RiskScout.com. We are here to help, whether it's big or small, diving deep in your program, or just answering a quick question. So we're always available for that. Some additional ways to get in touch with us are April as well. You can see on the screen here. Again, you will have this in your inbox shortly, as well as we do have an appendix here of some of those additional resources to help answer the question that came in during the session. So if you do want to take a little bit of a deeper dive outside of the webinar content that we saw today, that's all available for y'all as well. Again, that is all the time that we have for you today. Big thank you to April and Kristen for joining us today, producing this great content that we were able to share with y'all. For everyone that joined, thanks for spending your Halloween Eve with us. We hope that you enjoy the holiday tomorrow. Keep an eye on your inbox. We'll have an email coming in there tomorrow morning. And if you do have any additional questions, you know where to find us at RiskScout.com. Thank you all, and we hope to see you on our next one. Have a good day.
Thanks.